Hello, I'm Michael Bickers, Managing Director of BCR Publishing. I'm delighted to be here with Sean Edwards, who's Chairman of ITFA, and we've just finished and closed our first Trade and Investment Forum event, which I think went very successfully. ITFA and BCR have cooperated on this event, and we've managed to get a room full of people, stakeholders, shall we say, who are very interested in creating trade assets as an investable asset class. Sean, I'd like to ask you some questions about how you thought the day went,
of course,
and maybe something about the key takeaways that was achieved today. What do you think are the key takeaways that?
Well, the key takeaways I think are twofold. Firstly, there's a lot of interest in this asset class. So what was, and in a way, Michael, you know, this is the first time we've done this. This is the first time I have been to an event organised by anybody that's had so many non-banks. I see a lot of friendly faces at all the many conferences that I go to, and I love all those people. But I'm talking often the same thing, and you know, it's like you're talking to your own family members, and actually you want to bring in friends as well. And what we find today is there's a lot of people who are trade curious. There's a hierarchy of those funds and investors. Some know a lot about it, some know very little, some are opportunistic, some are just trade curious. Today was about explaining what trade assets are, what the opportunities are, and what needs to be done to make that attractive for those investors. So today, uniquely, I think, of any conference I've been to in the last 10 years, I think has brought in that new community, that new class of investors. What's in it for banks? Banks, of course, increasingly now, and maybe this wasn't the case 10 years ago because of pressures on balance sheets, because of regulatory change under Basel, and you know we are taking the debate, the discussion to the regulators on Basel 3.1, both in Europe and in the UK. But it's looking like trade will get hit. That it will be harder for banks to hold trade assets to maturity. Nevertheless, as we saw today, they are very much the best people to originate trade assets. But we need to sell them. So today was about that, those two communities meeting, talking to each other. One of the things that we've seen, of course, is that we need to try and speak a similar language, or at least if we speak different languages, we need to have a translator somewhere in the middle. And that's what some of the efforts that we've done through the ITFA Whitepaper.
Before we go into the detail, let's just have a look at the bigger picture and the significance of what we are trying to achieve by these events. There's significant benefits to banks and practitioners, of course, but also to businesses and the wider economy.
Absolutely correct.
So, okay, we had a lot of exchange of information at this event, but do you think there's a good chance of synergy being created here in terms of cooperation, in terms of people cooperating and trying to move this forward?
I do think there is. I think a lot of the investors have been put off by the apparent complexity of trade. Anybody who's been in trade for a long time will say, well, actually, it's really quite simple. You've got as one of the speakers said earlier, you've got a buyer and the seller, and somebody in the middle providing finance, unless it's completely open account and on sort of open credit terms. But so you've seems to us to be a simple product. But for somebody coming in, looking at the different instrument types, the different rules, the different regimes, the different sort of approaches, and increasingly the structures being put around this, they need somebody to explain what that means. And this is what we try to do today. ITFA and the ITFA initiative, that's the ITFA Trade Finance Investment Ecosystem Initiative, is about explaining that. A pretty good point that was made today was that we talked a lot about standardisation. Maybe we don't necessarily mean that. Maybe, in fact, what we mean is simplification. But it really is about bringing the two together. The other, I think, the other important party that we had today was the government. So we were incredibly honoured to have the conference.
I wanted to ask you about that, specifically about this bill that is going through Parliament on the digitisation of trade finance documents. Or trade documents. I think you mentioned that, correct me if I'm wrong, but this might well be opening the floodgates in terms of what we've all been talking about here today. Do you see that as the main sort of the catalyst that will really get this moving?
I see it certainly as one of the catalysts. Of course, there has to be, at the moment in trade digitisation, we're going through a bit of a difficult period with the failure of a couple of platforms, and for either failure or the shutting down because of a lack of adoption. I think it's very important to understand that solving the legal problems doesn't create a market, right? It allows a market to be created. It's an enabler. It's a first step. But we've already seen a couple of our members, Lloyds and Mercor, already issuing digital negotiable instruments, or the equivalent of digital negotiable instruments, using the ITFA DNI standards, the EPU, the electronic payment undertaking that seeks to reproduce a negotiable instrument, but is not strictly a negotiable instrument. It has more or less the same economic impact or economic significance or economic value, but not exactly the same legally. When the bill published it comes into force, and what Lord Holmes told us today was, and he's the member of the House of Lords who's been shepherding the bill through Parliament, that it will come into effect in the spring, or it'll be passed in the spring, will come into effect 2 months later. This is all part of the bandwagon of MLETR model law on electronic transferable records adoption that is happening globally. I don't think the day that the electronic trade documents bill is passed, I don't think suddenly everyone's going to convert to digital documents. Okay, the bill itself, of course, is permissive. It doesn't do away with paper, and one of the lessons we've seen with the current problems of digitisation is that there is not resistance, but there's inertia to adopting digitalisation. But it's an idea whose time is more than come, and there's nothing more powerful than that.
Always resistance to change, of course.
There's always resistance to change for a number of reasons. But I do think psychologically this will have a big impact. It's not going to transform everything overnight. But already, as I say, we've got people working on this. I've spoken to major banks in France, for example, who said, we love these types of instruments. I want the law to come into force. There are still issues about what happens if you've got the law in one country but not in the other. Those actually, and I gave evidence on this actually on the House of Lords evidence session on the bill. In theory, that should be no different from what the position is currently on the paper, but people will question it. People are still questioning digital signatures.
Let me just go back, if I may, to your comment on simplification.
Yeah.
This is primarily for the investors to understand what's going on. It was mentioned on more than one occasion, I think, in the conference today, about the kind of terminology that's being used, particularly with supply chain finance, in that there are so many various terms for supply chain finance. Reverse factoring, confirming, payables finance, supplier finance, probably another couple that I've forgotten about. But what can be done about that, do you think? Well,
what can be done about it is that we've produced a taxonomy which shows really the whole universe of trade documents, of trade instruments, of trade types. That is starting to become known. I wouldn't say it's universally known. We have talked about producing a legal directory, sort of definitions, a little bit like what has been done with supply chain finance. But we have various guides. Look, I think the important thing about simplification is not we're going to have one instrument. All right. I believe that digital negotiable instruments are a very powerful instrument for various reasons, because they reproduce all the benefits of the paper instrument whilst having all the operational cost savings of digital instruments, and enable all sorts of things to be attached to them. Credit ratings. We had a great session with Fitch today. ESG ratings. And KYC AML, for example. They're attachment points. These are digital containers. So I think they are great, but they're not going to be the only instrument that people invest in. So the taxonomy and the guidance that we produce, I think, will help people to understand that's what we mean by simplification. I think it becomes simple because you know what it means.
Yeah, and we're talking about game changers here, really, aren't we? I mean, all these things you've just mentioned are going to means very significant changes and
But
improvements.
the game is a marathon, unfortunately, I think. But I agree that these changes are very significant. But say, don't expect the change to happen overnight.
And finally, Sean, just in 12 months' time, we may be doing this again, an update.
I hope so, Michael.
Where do you think we might be in 12 months' time in terms of what progress will we have made?
What progress? I certainly hope we will have a lot more use cases. I know that those two institutions I mentioned are trying to scale it up. Those are all both UK institutions. I'm hoping that, and we had a member of Power Europe Plus today talking about changes in French law. So what I hope is a few things. Firstly, that what we've done in the UK with the Electronic Trade Documents Bill will push adoption of MLETR type laws. We haven't adopted verbatim the MLETR. Some countries have, like Singapore, pretty much, Abu Dhabi Global Markets. But they're not going to do that in France. They're probably not going to do that in Germany, but they're looking at moving that. And I hope the Commonwealth, which of course has laws that are inspired very much by English law, will also see this as a beacon, as a beacon to change. And I think that, so in 12 months' time, I think we will have I think we will have a lot more of those laws in place. We will have the international players like the big French banks who are actually starting to use these instruments, maybe not at scale to begin with, but what I'm hopeful for is a lot more use cases. I'm hopeful that there will be more providers. The technology that you need to do this is actually pretty generic. It's not just blockchain, of course. There are other ways of doing this through registries. But the technology itself, is there, it exists. It's pretty generic. So it's being used for bills of lading, but can be used for negotiable instruments. And as soon as people see that market, I think we'll get a lot more competition in the offering of the tech providers, and that means it becomes more accessible, cheaper to use. So I think by 12 months we'll have got really way beyond the proof of concept. We'll have got to real use cases. I don't think we'll have got to huge scale yet.
Okay, so you expect to see some traction.
I expect to see a lot of traction.
So, let's...
Irreversible traction, I would say.
Irreversible, okay. Well, let's see if you're right. Sean Edwards, Chairman of ITFA.
We'll speak again in 12 months.
Thank you very much for your time. Thank you.
Thank you.